This is your LMAX exchange technical update for Friday, August 12th, 2016. Euro dollar. So the euro continues to be well capped below the 100-day moving average, and while it's below this moving average, there's risk for a lower top and fresh downside extension towards next key support, which comes in at 109.12, that low from the 24th of June. At this point, only back above the 100-day moving average would compromise this bearish outlook. Sterling dollar. So cable remains pressure to the downside. The market's been consolidating above those plus 30-year lows that we saw back in July, but there does appear to be risk for fresh downside with the market breaking down below some internal resistance above 130 and heading back down towards those 128 area lows. A break below that 127.98 low from July would open the door for the next major downside extension towards next key psychological barriers at 125. At this point, only back above 133.72 would compromise the immediate bearish structure for sterling dollar. Dollar yen. So it's clear here that dollar yen remains confined to a well-defined downtrend, with the market now hovering above 100 and contemplating a fresh downside extension back below that multi-month and yearly low that we saw back in late June at 98.99. At this point, only back above recent resistance at 102.65 would take the immediate pressure off the downside. Euro Swiss. So Euro Swiss is just a story of range-bound trade over the past several days. The market would need to break above 109.45 or back below 107.78 for clear directional insight. Aussie dollar. So Aussie has rallied up in recent trade impressively, with the market pushing above 77 and potentially exposing a retest of the 2016 high going back to April at 78.35. But if the market can't establish a close above 77, there is risk for a lower top and topside failure ahead of a resumption of weakness back down towards key support, which now comes in around 74.21. Dollar CAD. So dollar CAD continues to show signs of the formation of a major base, with the market now looking for a fresh upside extension beyond that recent peak that we saw that was already broken at 31.89. This sets the stage for a move up towards the 135 to 140 area over the coming weeks. Any setback should be very well supported ahead of 128.62, with only a break back below that level to delay the highly constructive outlook now. Kiwi dollar. So Kiwi has pulled back sharply after racing to a fresh 2016 high on Thursday at 73.25. The market, however, does remain pressured to the upside and would need to take out some key support, which comes in around 70.87, to take the immediate pressure off the top side. SPX 500. The S&P 500 has broken to another fresh record high, and there is risk for a fresh upside extension now towards psychological barriers at 2200. But there are signs of exhaustion, and if the market can turn lower and take out support at 2147, this will do a good job of shifting the structure and open the door for a fresh downside extension, taking the immediate pressure off the top side. Gold. So gold has seen a pullback in recent trade, though overall the market remains highly constructive while it trades above 1300. So if we do see any setbacks, look for 1300 to support in favor of eventual upside extension back above the 2016 high at 1375 and towards 1400 to 1450 further up.